Okay, good afternoon, everybody, and welcome to Gary's Traders Group. It is Monday, September the 29th, last Monday of the month. I want to welcome everybody on board today, new as well as old. And without any further ado, I have a lot to get through, so I want to get right into things. Let's get through the disclaimer. This webinar is for educational purposes only. Trading does involve risk. These webinars are designed strictly for educational purposes. I'm not giving any kind of trading advice. Okay. Let's go to the micro picture first. Economic calendar. This is can everybody see this okay? I try to get it so there isn't a lot of other junk around it other than my desktop, I guess. Personal income and outlay came out today. Bottom line is, for the governmental news that came out today, we are making more, spending more, and saving less. To summarize it, that's what's going on according to our government statistics. ISI manufacturing on Wednesday, jobless claims, of course, and unemployment situation that always comes out the first Friday of every month. Things to be very aware of. Okay, that's from a short-term perspective. From a macro perspective, let's see what happened in the market today as far as the index. Well, as you see, we did have a nice pullback here on the Dow. It seems to be touching around the 38.2 extension. We still have a decreased DPO mobile. It looked like the DPO, the detrending price oscillator, this tried to pull up, but because of last Thursday's 254 pull down, it's pulled back down. And so we still have a not an oversold market yet. You know, if it was down in this area, then I'd be looking for things to start pulling up and things to start getting froggy and jump up. Same thing with the S&P. Looks like we almost hit a 50% retracement. We almost have a doji today, so there's some indecision. Tremendous volatility. This market opened up very heavily down today due to the political crisis that's happening in Hong Kong and the protests against democracy. So, you know, those kind of things would just blindside us. But wow, I mean, really whipsaw, very difficult for directional trading this last week. Like Bob had said last Monday's webinar, you know, maybe it's best to stay in cash or on the sidelines till things settle. And you know what? I'm going to repeat that to everyone. You know, this is a very tenuous market, and you have to have some leather skin to be able to pull yourself through this. The NASDAQ did hit the 50% retracement. You can see how distinctly how it's just bounced off of that 50%. Really, you know, came down hard last Thursday, and then Friday it pulled up, bounced on the 50, pulled up, came down, it tested the 50 again, and then pulled up strong. But we still have a decreased DPO. And remember, this thing works faster than the MAC. So I don't expect things to quite turn around yet. We're still in that very crazy time of year where you're going to have volatility and the like. Okay. I want to see if one of our members is on here. No, he's not. Okay, so I'll just go over something that was requested from me, and that's to show on best choice how to find 5-year or less old stocks, how to find them. And that's the list that I created yesterday. And the way to do it is go to your wizard, add the primary basic conditions. I brought my volume up to 500,000. $5.18. I brought my stock price up to about 25. $25.46. So those are your basic parameters that you load base parameters on any list that you're looking to create. Then under the conditions, scroll down to the Bs. These are LT for long term. Scroll down to the Bs and look for number of quarters of earnings data and add that. It goes from a range of 0 to 218 quarters. I don't know how many years that represents. There's 4 quarters in a month, so that's like 40, over 40, 43. So all you would simply do if you want to find stocks that are less than 5 years old, using the base parameters of volume and stock price, optionable U.S. exchange, bring the top down to 20. 4 times 5, 4 quarters in a year, times 5 years, will be 20 quarters. And of course, you can save it to the wizard's memory if you want, so you can always come back to see what the parameters are. I'm not going to do that. I'm just going to save it to a user list and date it today's date. And then we'll go to the, you can always find it in the search wizard and run it through the search wizard if you want. There's 223 stocks that are 5 years or less, 500,000 or greater, stock price of 25 or greater, optionable in the U.S. exchanges. And just for illustration purposes, I already ran it yesterday, but we'll look at this list that I just ran. And you will see that, well, why did it do that? It shouldn't be doing this. It should not be doing this. I don't know why this, and unfortunately, I did not save the parameters of the other list that I created. The 5, I don't know why it's showing me, well, here's an illustration I did want to show you. This is the list I created. I'm going to go back and try to recreate it. And for Kirk, I will try to show it again. But this is so evident of the market in general, this huge V that happens from about the middle of September to about the middle of October and then just pulls up. You know, one thing to be aware of, I learned this for some floor traders, you know, around this time of the year, around the middle of October is when you, middle towards the end of October is when you want to move into large cap stocks. And the little known secret is, when do you move into mid cap? Well, you move into them 4 days before Thanksgiving. As a matter of fact, the Wednesday before the Thanksgiving. So if Thanksgiving falls on a Thursday, you get in on the Wednesday before. If it's a Friday, get in on the Wednesday. So that's when you want to move into mid cap. But boy, isn't that just illustrative of what this market does? Here's ADT sitting up here. So 1 out of 1 year. Of course, we can't see a repeating event on that. And 2 out of 2 years it pulls up. Again, very dangerous to play these types of trades. But it's interesting when you look at some of this volume on ADT. Of course, you do have short interest as well. But look at the January. Look at somebody way out here at the 50s. There's 10,371 contracts. And I really thought to myself, why is that? Why is somebody going so far out of the money? I do not see anything correlating for a very large spread straddle, or strangle, I should say, you know, or other types of strategies where you'd be selling way out of the money. And unless they're just collecting premium, but that's not a lot of premium, you know. Between the bid and the ask, that's 10 cents. Of course, if you had all 10,000 contracts, then yeah, but that's a lot of time to buy. So then I went to the charts, and I put in ADT, and I went to 5 year, I believe. And sure enough, there it is. The last high based on 5 years of ADT. So that's why somebody's buying way out there. I guess they're figuring that ADT is going to get froggy and just jump from $35 all the way to $50 by January. Either that or, you know what, even if it flies up, I'm sure that 10 cents will grow. But interesting how you can see that. But I want to really show you this V, which is so indicative of the pattern. And these stocks, here's another one, Allen. Again, they're all less than 5 years old. AMC Networks was a nice looking one, 3 out of 3. Again, very dangerous to play, folks. I just want to forewarn everybody, even though they look great, 100% big V patterns, AMC as well has a lot of, spot month at 25 interest versus almost no short selling. And if you go to December, you've got a lot of open interest and at the money and one strike out. I don't think November's that great. It's got 300. There's zero short on this side. So, I guess a lot of people are feeling very bullish about AMC Entertainment Holdings. I would dig into their earnings. I would dig into their cash flow. I'd dig in a little bit to the fundamentals before I'd ever just carte blanche because of this type of thing make a trade. If you look at where is it sitting at, well, it's been trending down. There's a big gap here, probably missed earnings. But it's been beat down for quite some time, so who knows? I mean, maybe seasonally it's time for it to pop up. And you can go to tab 1 and say, well, where is it at this year compared to all the rest of the years? Boy, sitting way down at the bottom. Interesting looking chart, but be very careful with that. AOL is the same thing. Pulls up, looks like real strong on earnings. Guess it only missed 1 year. But that's only because if you bought the stock at the closing price of October 31st and sold at the closing price of November 5th, did it make money or lose money? It's saying that it lost 60 cents. Now, I don't know if earnings came out here and shot up, or if earnings was here in November and it pulled down. But either way, interesting looking chart. So I don't know why this didn't work out. I don't want to belabor this because I got so many trades to go through, and I will not be able to go through all of them. I'm going to actually show you the ones that I have on the list today so everybody will be able to see it, and then you guys give me what you want me to go over, because there's, let's see, what's 13 to 33? How many is that? 20? So I have 20 long trades, 1 earnings, and 1 short. So we'll look at the list and see what we can go through here. But I want to go back to this because this frustrates me why I didn't find this. I thought that's what was the formula was to go based on earnings, how many earnings there were. Current stock price, bring it up to 25. And let's go back down here. I was looking at these to try to figure out which one of these things, and I first thought, well, number of months of price data. Okay, but then I'd have to say, all right, well, how many trading days are there actually in 5 years? And that became just too cumbersome for me. But then I thought, number of quarters of earnings data. Well, gosh, okay, if I add that, and it says that there's 218, which is 43 years. If I bring this down to 20 quarters, then I should be able to find it. Can you hold on 1 second for me? I think somebody is calling. Bear with me.
There are 6 other callers on the call.
Apologies. Can everybody hear me okay? Okay.
There are 6 other callers on the call.
Okay, sorry about that. Can you guys hear me? Yes, no, yes, no? Bob, Greg, Henry, Tom, anybody say yes? Thank you. Okay. I would think that was the logical answer is, bring the number of quarters down to 20. So it's only showing me from 0 to 20 quarters. Now, why this thing is not showing it, I don't understand. It should. Again, it's giving me 223. And where is the other one that I created that was the 928? How many was it? See, there's only 78 in that one that were less than 5 years old. But I again have, for some reason, even in this one, 223. So it's got ones in it that are mixed for some reason. It has BITA, which Pete has made a fortune on, buying the Januaries and selling the spot months all the way from March, and he's just rolled. I mean, he bought it when the thing was at $30, way back in here when it was around $30, and he's enjoyed that incredible run on BITA. Again, I don't know why this one is mixing in ones that are, see, but this is, again, less than 5 years, so it's finding him, but it's also mixing in others. So I don't know. Maybe I need to shut it down. But that is the way to do it, is primary conditions, and then scroll down to the B's, add in number of earnings, and then bring this down to 20. Now, you know what I may have done? Oh, you know what I think I did? Yeah, I know what I did. I brought this up to 1 million, I believe. And then, 1 million shares, because I figure if it's a low number of years of being traded, I want to have tremendous liquidity, tremendous volume, something that's extremely active, in other words. Let's see if that was the secret. Well, brings it down to 144. Again, I don't know if this is going to do it. Let's see. Sorry for belaboring this. I won't spend any more time after this on this. Nope. Still finding ones for some reason that are. This one, Ancestry.com, isn't, but it found that ADT, It found AOL. So I don't know. I don't know what's going on. But I will find out, and I will email you, Kirk. You're not on this webinar, I believe. I think you watched the recording, so I will find the answer to that and verify that is the steps that you take to find stocks 5 year or less, because I did it yesterday, and it's blatantly evident by this one here. Every stock on here that you see is less than 5 years old. So, okay, let's get to the meat of stuff. Oh, I wanted to show you guys something. Something I thought was really interesting. And then I need feedback from you, so you guys got to get on the chat box and then talk to me. Either that or, yeah, you can do that. Just chat to me rather than I open up the mic to you. I was looking and trying to read, and just, I like to read, and I thought 5 breakout stocks under 10. And this was all triggered by under 5 years, and my thoughts said, under $10, triggered. And then this popped up, NQ Mobile. And I thought, wow, I wonder in the mobile technology how it is. So I went to the charts. Let's change this time frame to 6 months. And what's interesting is it's just me. Now here, I guess I got to do it in shorter time so you guys can see this better. No, even that, you can't see that great. Let me try, let's do 30 days, 4 hours. There, you can see that. It doesn't quite give 30 days. But boy, is it really busted through. One of the things I was seeing here, you see this, you can't see it, but the green line there's the 50. And in reading this article, I did a lot of research on here on MAs and everything else, and what he saw is a triple bottom form pattern at these levels. Then he goes on to say if it begins to flirt with the 50-day moving average of 642 a share, well, look where this thing ended up at. This is a breakaway stock right now, and it's actually closed above the 23.6. Market players should now look for long biased trades if NQ is managing to break above its 50-day moving average, 642. And then once it clears more key overhead resistance at 654 to 718, a share with high volume, look for sustained moves, blah, 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 blah. And just everything happened today. I just watched this trade form right here. So then I said, well, what kind of volume does something like this have? And I went, wow, I guess there's a lot of interest in this company. So I thought that to be very, very unique of the bullish volume. IV's out of the roof, though, but it may be typical because this company is not that old. And then I looked, well, what is over time? And I said, man, 27,000, 44,000 contracts somebody bought at the 5, 2 strikes in the money. Somebody knows something. Even though there's some short interest out there, there's a tremendous bias towards the long. So somebody knows something on this, and based on this article that I read, very interesting, I thought I would share this with you. And this guy did a lot of technical analysis. He doesn't really talk about any of the it says, if that breakaway triggers soon, then NQ will set up to retest or possibly take out its next major overhead resistance levels of $8.44 to $9 to even $10. And I thought, wow, maybe there's money to be made there if we go out and buy some time. It's not a lot of money, guys, out here. We're buying Januaries. So I thought I'd throw it out there. Now, I did not include this on the Excel sheet. I need to hear from you guys. Would you like me to include this on there? The reason I didn't is because when you look at NQ from Best Choice on a seasonal, ugly, guys. Not a lot of history. Even though it's sitting meandering sideways, this tells me, well, again, 1 year, if I highlight this area, well, let me go back to best rating a whole zone. Now see how it zigzags here? You really don't know with so little history of which is going to be the direction. If you highlight it, it does say 3 out of 3 long. You'd think this is the composite that goes down because of this nasty year here, which is 2013. Just took an absolute dive. But it also had taken a huge run up to 100% of its high. So if we go back to 2013, and let's put in 2 years, let's go here so the chart's not skewed. There's 2013, guys, so I don't know what this is. Is this earnings release? Who knows? But then it ran up, filled the gap, or filled the area right here of its, before it fell down. One of our members popped up something and good about this company. I'm not familiar with it. Thank you for sharing, Leon. He's stating that this company evidently was major sabotaged and attacked by short seller Carson Block of Muddy Waters last October, which is blatant right here. So, maybe he did that for some reason to drive the stock really low and enjoy the profit back up. I don't know. But I just thought it was an interesting chart, an interesting observation based on this article, and the fact that watch this trade form today. just busting out like that. And I went, wow. I got a PPS trigger. I got a Mobo breakout. And it's just busted through all those resistance levels that this guy talked about and closed at, $6.99, $7. So very interesting. You guys tell me if you want me to include it or not. All right. Here is here is the list. Okay, somebody said please include, and so I will. I spent a lot of time over the weekend. Sometimes I think I overkill for what I get paid for these things and the stuff that I do. I spent hours and hours and hours researching because I like it, though. That's one of my downfalls is I enjoy doing this. One of the things that I saw, and I thought, let me think out of the box for a second. Again, I'm always, since we're all members of Best Choice, trying to use Best Choices as a tool. So what I did is I said, let me take a look at the spiders. Which of the spiders really show some kind of movement in October? So I went through biotech, which I will tell you I was thinking of talking about because it's a historical short, and there's a lot of talk out there for shorting biotech. So, but it just didn't seem to have the strength, and I really didn't want to go against historical trend of what typically happens from the middle of October towards the end of November. It's usually happy time. So I kept going down Strax, the street tracks for oil and gas, and I said, okay, that looks interesting, right? And I said 7 out of 8 years, and it's the only one, by the way. I don't think that there's a green one in there. There may be. Yeah, there is. I know this year is like, okay, really? But it did pull up. Okay, so you did have a pull up, but then it crashed. So, that's how you can kind of really decide, is that a year that it moved? It's showing that if you bought here and sold here, it really was flat. It's like right from here to here. So I thought, out of all of these, and I went through every single one, this is the only one that showed a strong historical move. So what I did then is I went online and I found a site that showed me the top largest oil and gas drilling companies in the United States. And so then I looked at each and every single one of them. It's Exxon, Chesapeake, Anadarko, Devon Energy, BP, and ConocoPhillips, Southwest Energy, Chevron, and Williams Energy, or Williams Partner LP. So then I looked at each one of them through Best Choice, looked at their technical setup, and that's where I came up with this list that you guys can, oh, come on, look at. And here are, and this shouldn't be XOP, it should be XES. My apologies. Let me change that right now. So all of these here were based on, and I'm not going to go through them. I'm going to let you guys do them, okay? And I also found the article that's related to this. At least I thought I did. I don't know why it's not showing me now. For some reason, I don't see my hyperlink in here, and I don't know why. It's gone. Great. Well, I did find an article that supports all of this here. And it may be this article here. And it was what, not that I really like him too much, to be honest with you, but does a lot of good research. And so I'm going to, that's one thing I got to tell you, folks. I am a master plagiarizer when it comes to trading. I mean, I don't profess to be know-it-all, but there are people that are a lot smarter than me that I'm going to capitalize on their knowledge. And this guy did run a hedge fund, and he does a lot of work. So, he mentioned some of these in here. But I went way, way beyond Anadarko, EOG, and Marathon and Occidental. So anyways, I will re-hook that link up so you guys see that. I'm not going to go over these, though, because it's just way too much. I have other things I want to talk about. You guys can look at all of these, but you see my rationale came from this pull-up for the oil and gas. And just to maybe show a couple of them that I think were real strong seasonally. SWN, for example, Southwest Energy. I've traded them before. I like the company. It's a nice run-up, folks. So take a look at all of those, and you can see historically these, things just, it pulls up. Not a lot there on 2010, 2011. What a nice move, guys. If you got in here, about 8% of its historical movement, I mean, that's 10, 20, 30. It's huge. It's a huge move from there to there. So anyways, take a look at all of those, and I think that you'll be able to find some good trades out of that, including OAS. I believe that is something oil related as well. Yeah, petroleum. Nice looking trade, though. 4 out of 4, and I see some nice percentage moves. And I actually went to every single one of these stocks and did a fib retracement on them. As you see, this is that NQ, just popped to 23.6. There's the 9, 16, and 50. Remember he said it could reach as high as $9 to $10 on that one article? That's the 38.2 and 50 right there, which happens to be right on top here of some of the last highs. So that's just NQ. But OAS as an example, you can see where I drew these in, and you can see where the retracements are. You guys can do this as well. I don't know why it's showing there 59 and change. Maybe I didn't do it on this one. As a matter of fact, it doesn't look like I did. So it's very simple to do, and it's a very, very good tool to use because it gives you confirmation and targets to shoot for and compare those with what you see seasonally and the mathematics behind the seasonality. 4085. And so there you go. You can see a big run up, topped at linear regression, pulled down, and now you've got a hull that's already moved. And Bob, you know how powerful that thing is. And if that DPO pulls up, we're way oversold. So there's a lot of good trades in here, guys, and I think you guys should make some real good money, including BTU. That's another one. That has a nice historical move. Now it's 84%, but that's out of 13 years. I think if you do best profit per trade, you may find it. Well, still, it runs actually all the way. But look at you got some good consistency here, and I think the only years it missed is way back in the early years of 2002, 2003, which, hey, we all know is a different economy back then. So, sorry, I get excited because I did a lot of work on this stuff. Take a look at these. Yum. Oh, did a bunch of research on STZ. Anybody know what STZ is? It's Constellation Brands. Okay. Article on it that I read. Expect Constellation Brands to beat estimates this week. And he does a real good job of describing exactly, digging into all sorts of things. And really what I like about this is that he talks about cyclical moves and patterns, I believe this is the one that he does it. Maybe not. Oh, yeah. Our extensive historical back testing. Well, think about that statement. It's exactly what Best Choice is doing, you know? So here's another confirmation of this. And he actually breaks it down. Last quarter EPS surprises, revenue, EPS beats, da-da-da-da-da-da. So anyways, that supports why I chose this. Even though I will tell you from a seasonal perspective, it's not that crazy. You know, it's not a big, huge home run. Where is this thing? I think I found actually right in here. There it is. No, that's a short. Where did I find my long? I found a long in here someplace. But not real strong from a seasonal perspective is all I guess I'm trying to say. So it says 10 out of 10 short right coming up here, but that's 1017 to 1023. So this is more of a technical fundamental play than it is from this perspective, even though this is contradicting, if you really think about it, 60% short versus what this article's saying. Well, I already got rid of it. But take a look at it. I think there is some strength in there. Really meandering sideways. I did the fibs on that. I did it based on a 3-month pattern. And it's just bouncing against the 50% retracement, if you guys can see this. See that? Just hitting it, coming down, hitting it, and earnings are coming out on 10-2 before market. So I like it. If you go to a volume on this thing, STZ, there's a lot of excitement here. If you want to buy some time so you don't feel the pain as much if it goes against you, you can go out into January. November isn't that great, but you do have some interesting interest right here at the 92.5. When I did math calculations, and somehow I did it and I found a trade in here, don't ask me where, I came up with an 87.5 October. Let's see if that's still good. I do so much stuff. 87.5 October. Yeah, I did it just one strike out of the money. It said 86.35, only went down 15 cents, got a 43 delta, plenty of open interest. But what I also did, and I did a bunch of research on this because I've played with this before. Guys, I'm going to throw it out there. If you don't want to do it, I totally understand. But I've really tried to look at how can I maximize profit but not put so much cash out, even though there may be some more risk. I don't know if you guys followed what I just said. I didn't want to put so much cash out, but I wanted to be able to be in the position a little bit heavier and closer to the money, and I would be willing to take on a little bit more risk. So what I did is a bunch of research on back spreads and ratio spreads. Okay? They're not that difficult, guys. They're really not. So if I go to here and you look at what I looked at the 85, 87.5s, which is 85, 87.5s. That's where all the open interest is. And gosh, 28 cents? Come on. That's what I like to see. I'm very, very inexpensively in an $86 stock. All it's doing when it is a back spread, there is more calls than there are shorts purchased. Okay, and the reason it's a ratio, it's how many, and you want to be as tight ratio as possible. It's another thing I learned. If you want, guys, I went to Thinkorswim and I read about this. Part of the reason I put this down here is this. The purpose of a back spread is to profit on a quick, extended move towards, through, or beyond the long strike. That's all I really need to know. Now, I did read through all of it and analyzing, yada, 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 yada. Don't want to get into all the specifics on that. But that alone, I thought, okay, I'm getting into it cheaper. I'm getting more options at the strike level that I would just buy a directional on. Then I said, well, what kind of risk am I taking? Well, I said, okay, maximum loss, $278 on paying 28 cents. And I thought, if I bought one contract, or I bought 10 contracts at 28 cents, that would be my risk, 280. But look what it says for maximum profit, folks. I like that. So I am limiting my risk to a defined amount. It is more than if I would do directional. But I'm in it for so cheap. So that's why I included this in the spreadsheet so you guys can take a look at that. I'll be more than happy to include this link so you guys can read up on this a little bit, at least what back spreads mean. If you want to look at it more and analyzing it, it's fine. To me, it just made sense, though, especially if I bought this and for 28 cents I went, well, what if I bought 10, sold 10, and bought 20? Okay. Well, for 28 cents, it just increases everything. My maximum loss was $27.80, but holy Toledo. My cost basis is still, see, when you're selling those, it's offsetting what you're buying. That's the beauty of a back ratio. It's just like a vertical, except you're buying 2 for 1. Anyways. The other thing I wanted to show you that's important on this that I realized, when you look at this, it's giving you a lot of information. One of the things it's saying is, at what level does the stock have to go to for me to break even? $90.28. So I need to expect the stock to go beyond that, beyond $90.28. So when I did the math, and I don't know where I got this, but I did, I'm expecting the target price to be $89.60. Okay, you know what? Everything in here that I wrote, guys, is probably off today because I did everything yesterday, and that's after the market went up 156 points on Friday. So please be aware of this, guys. Anybody who's listening to this or anybody that's on the webinar, when I do all of my calculations and I look at target prices, strikes, and everything else, it's based on Friday's close, not Monday's. So things obviously change. However, you've got the stocks to look at. You know pretty much directional what I'm talking about. You can see where the months are that I'm looking at. I'm giving the option of bull call spreads now to you. I hope you guys are taking advantage of these things, because this definitely, limits your risk, but also limits your profit. So, and I'm also doing all the statistics you already know. So all you have to really kind of look at is, okay, where is pricing? Where's the target? So I found this target of $89.60. And where the heck did I find that? I still, for the life of me, don't know. I don't know if I took this statistic here maybe towards the end. I thought I found one someplace different. Maybe I used 3.4. Now, here's something else that okay, this is the other thing I wanted to show you to make sure you guys know why I'm also looking at this. Don't be always faked out by the composite, especially when there's a lot of histories and you see a lot of stuff up here and down here. Ideally, yeah, you'd like to see something like that, right? And this is an anomaly year on Google, right? So you see no blue lines here, and you see the composite just really spike up, And you got 9 out of 10 and only missed 1 year, and that was 2012. Sure, I'd love to see this, but one of the things that I've always learned to do with Best Choice is look at from year to year. All right, last year, man, this thing just rock and rolled throughout October. Had earnings last year about the same time. It popped up here. And again, earnings are coming out this Wednesday, so it's just right at the beginning of October. So it popped up. 2011 took a nice pop up. 2010 moved up. 2009 moved up. I'm discounting 2008 because it wasn't a normal year in the market that year. 2007 popped up. 2006 didn't. It was the only year that I think it didn't work. Or no, 2 years. 06, 05, I think 04 it did though. Yeah, well, 04 popped up a little and then took off. So 2 years, but the most recent years over the last 5 have all been pretty much the stock has gone up. So I like to see that. That was another kind of a verification that I wanted to be in this trade. Okay. All right. So that's STZ, earnings coming out Thursday. You can read the article. All right, guys, start picking what you want me to go over. That's what's left. Well, I also have Sina. I guess I could go over Sina. Let me that. Nice looking trade. 10 out of 10. Now, what you see here, if you notice, is the composite turns green up to the green dots and then stops. That's based on best rating a whole zone. If I switch that to best profit per trade and think, well, does it have legs to run longer? It changes it to 90 and it runs all the way in. So if I look at various years, last year it looks like it popped. That year really didn't, 2012, even though it says there was a profit, right? 2011 it really took off good. It took off towards the middle of month long here. So anyways, you can look at year to year, year to year. Don't want to go after everything. So anyways, if you look at this average move based on best rating a whole zone and you take that 13.11 and you go to options. Not a lot of interest, so be careful on this thing. I picked out the 80s, AUK 80s, or AUK 75 80s. So well, I was on a back ratio. I'm sorry. There we go. That's a little bit better. AUK 80s. This went down 51 cents. That still wouldn't change my decision making. 461, 23 delta. And so if you took and added 13% to that right there, and then you went to the charts and you said, well, what does this technical tell me? And why don't I have, oh, maybe I added this one late. Nothing really tells me to get into this thing yet, but I'll tell you guys something. This is such a volatile market that you almost have to be a contrarian trader to really time the market good. In other words, if last Wednesday when the market was roaring up, you were a contrarian trader and you saw something historical that you wanted to short, you would have bought some puts. Now, those puts would have been very inexpensive. You would have made money. If when the market tanked 254 points last Thursday, and you were a contrarian trader, and when it was way down and everything, the calls were dirt cheap, and you bought calls on something you felt bullish on, and the market rock and rolled 156 points the next day, you would have made money. So you get my gist of what I'm talking about. As you see right here, folks, it's bouncing off the 50. Should it go down a little bit further, that would be a trigger for me around the $69, $70 mark. Okay. Again, you guys can do this, but everything is indicating right now. Let me switch to a tighter time frame. Everything is indicating right now this is still very bearish. You know, I have a 1020 crossover. Now there's the 200 though. So that's a very interesting moving average that if it happens, if you see this continues out to here, let's say, and this goes to here in this area, and these things meet, then you're going to have a nice bounce. One of the things, though, that I didn't like about this, I forgot what year it was. See, it tanked hard there. I'm trying to find this year here. Well, that was a nice explosion. Well, one of these years here, I can't figure out which one it is. There it is. 2011 really took off. One of these years, though, it pulled down. So what I listed this thing as is what I call a RUI, a run-up to earnings, which is Tuesday the 23rd of October, and then take your money off the table. I took a target of 84.31. Which would be up in this area here. Right about there. So pop back up. BTU is a gas one. I said wait for a trigger, i.e. stock reversal, but it's a nice historical one. Again, it has to do with that oil and gas. But I didn't like what I saw. It was really just selling off hard. Now, I don't know if there's a problem with this company. From a charting perspective, I believe I did this on a 6-month basis. I don't know why, but I guess I didn't. So it hit a new low here. If it happens to turn around, that's what you're looking at for retracements. 61.8 being around $16, right at the top of the last high where it was at. First resistance would be the 38.2 and then the 50. Okay, these are all coming later on. They're also earnings related. What did I say? I said wait for trigger, stock reversal around 190, 193 level for ICE. Okay, where's ICE sitting at right now? Well, it's kind of pulled back. You can see where historically in the beginning of it starts to pull up in October. Well, this year it pulled down and then pulled up a little bit in 2012. 2012 was a bizarre year for a lot of these companies. 2011, though, it spiked up in the beginning of the month. 2010, the same thing. Went up in 2009. Technically speaking, it's doing one yo-yo pattern, really nice up and down stock, but way overbought and pulling back. So that's why I said wait for the trigger in my notes here for the stock reversal. Whatever technique you use, oh no, that's for BTU. I'm sorry. Here it is. Wait for the trigger. And I said around the $190, $193 level, which puts it right about at the mean, right at about the mid. See the mid right here, folks? The top of the chart, 190. And I think I also derived that from some fib numbers. Maybe I didn't. Oh, there they are. But these are extensions. Yeah. Yeah, this is, okay, what I did is I did retracements and extensions on this so you guys see where it could potentially still go down to, right? And I said between the 190, which is about right there at the mid for linear regression, 61.8 is 191, so right around that area, if it gets there, it's probably going to bounce from there. You kind of have a doji today. So depending on what happens in the market, again, if we closed down only 41, we were down 171. As long as there's no, I think, international turmoil, we probably will be froggy tomorrow and start to jump upwards. But that's why I put these numbers of between 190 and 193 level. Apple, Adobe is an earnings trade as well. Something to be aware of. And you always want to start looking at these trades early, folks, in case the move happens early. It's a 90%er based on best rating. I think there's a 90%er based on best rating, a whole zone. I always like to hit the puzzle piece just to make sure that I don't have any kind of corrupt data when I'm highlighting things. Okay, so 90% winner starting about the 8th. So sometime in the next week is the way I look at it. Look for that 190, 193 level. Oh, I'm sorry, that was ICE. Excuse me. Let's go to Adobe. Oh, well, there you go. It shot up and it went down and filled the gap. See right there? There's this big gap between here, and it finally went to here and filled that gap. Ran up, busted it. Now it's below linear regression. Linear regression is pointing up. You have a curving MAC pulling up. And that's a really, and I'll tell you, there's a trader on the webinars here. We talk quite often, communicate, and he knows how powerful these combination of 4 triggers are from a technical analysis standpoint. The PPS, the MOBO, the DPO MOBO, and the HUL. It's all triggered with a stock that is trending up at the bottom of linear regression. Boy, if that's not a trigger to say, yeah, today would have been a good day to jump in. And, you know, whenever you see a stock that is contrarian to the direction of the market, it tells you one thing. That's a strong stock because it's standing alone against the trend of the market and pulling up, and it closed up 86 cents today. So, oops. Still have it on fibs. So it evidently, well, maybe it missed earnings here. No, oh yeah, it did really well. I guess maybe forward guidance wasn't good. I don't know, but evidently they already had earnings, and now they've sold off. They had earnings on 9/16. Interesting. So this has nothing to do with earnings. This is just a cyclical, sold off, on its way up. Okay, I will, Tom. I'm going to do that right now. I'm going to finish up by going over the last. I'm going to go over Apple and Baidu. Baidu. Guys, Apple, strong company. i6 sales are through the roof. 90% probability. I don't remember if this is again, 12 wasn't a crazy year. See, in 11 they missed though, or maybe they didn't miss. Maybe they popped. Guys, what you really have to do if you really want to know of how a company did, this is what I do. And guys and gals, this is your money. I'm going to go back 5 years, and this is a quarterly report, right? I mean, this happens to be, that was their July, so I know that Apple's is coming up sometime towards the latter part of October. But you want to look at what did it do last year. And there was earnings on the 28th. It closed at 75.70, and the next day it went down. So if we would have positioned ourselves to try to do an earnings trade, we would have lost money if it was directional. No, maybe on a straddle you would have made money, but we really don't take that strategy. We like to do directional buy calls, buy puts. So then you have to just shrink it. What did it do the year before? Well, year before there was earnings on 10/25. Guess what? Tubed. Not a good year. So that was in 2012. What about 2011? Once again, came out on 10/18, tubed, went down. So you have a propensity. Remember, best choice really is about buying the stock. So if you really want to know if there's a gap on earnings, that's where you really need to do your own homework. Now, that didn't take too long, folks. It took all of about 2 minutes, and I've already gone through 4 years. I could finish up by saying, okay, what did it do in 2010? And 2010, it 10/18 closed at 45.43, and 10/19 it went down. So you wouldn't have made money directionally on that either. So to me, this is a RUI, Tom, and everybody else. What is a RUI? A run-up to earnings. Take your money off the table before earnings. Okay? So I would trade Apple. And I think when I looked at it and I said, okay, 8.07% move, go to volume or an open interest, see what premiums are. Tons of obviously action. October, huge open interest at the hundreds, 206,000 contracts, unbelievable. Go to January, 261,000 at the 100 at the money. So huge open interest for bullish trades, just incredible. I mean, people are 123,000 way out here at the 110s. So from a technical perspective, let's change this back to 6 months and show all drawings. And there you go, folks. I don't know if you could see this, but I did fib extensions. This is a fib extension right here. I went from here to the low, and then it shows me where potentially it could go to. So 107.95, 106. Historically, it says 8.07. Stock closed at 100.11 times 1.0807. 108.18 based on its close today, based on its historical average move. So the 105s was 82,000 open interest, and look at that volume today. Holy Toledo. 6,390 contracts. And that's about a 3% premium at the 105s. That's January. So you could buy a lot of time and not worry about some whipsaw. Of course, the 105s here is 74,000 contracts open, and the most number of contracts other than at the money that was bought. And even at the money, at 100, and you can always go to best choice, and go to what if. Oh, which one are you? There it is. Problem with the October expiry, because it's in such weird increments, the what if really doesn't show much. You know, this is kind of like a P&L. Instead of dollar amount, it's percentage of where it could potentially go to. You could also do the same, folks, and I wanted to do this one day, is use a probability analysis and do a sim trade and show what that could possibly be from a risk reward standpoint. Oh, I didn't do a sim, did I? Should have bought it, sorry. The 105s. Oh, this is the wrong one. No, that's October. That was the right one. Okay, so October 105s. $0.38? Is that right? OC 105s is 38 cents? God, that's cheap. Holy Toledo. But here's the thing about any time you go into a trade, be it long or short, with 3 weeks to expiry. It's a crazy thing, folks, because remember, an option's like an ice cube. As soon as you take it out of the refrigerator, it starts melting. An option starts decaying. If that move does not happen within the next 2 weeks significantly and get to your strike price and through, the last week between theta, time decay, and vega, the volatility, will eat up any of your delta movement upwards. So, you know, if it meanders and goes to 104, 103, and then stalls at 104, you will lose money on that trade, even though it went in your direction. So keep that in mind. The move really has to happen the next 2 weeks, not the next 3 weeks. Okay, a very important note to make. We could look at risk profile of break even, of where is your break even amount of profit. And you could see right here when you move your mouse based on expiry, about $176 profit, which is not bad. You know, one's the this one, God, I went through this whole training. I spent 3.5 hours with the lead trader at Thinkorswim going over this. If you ask me how to use this now, I probably just forgot completely. You know, this is an expiry cone. You have the same ability, everybody, to do that on charting. Go to studies, and again, I know some of you don't, not everybody uses Thinkorswim, but it's just such a phenomenal tool. Probability cone, probability of expiring cone. If you click on that and you read what it says, it's actually a formula. It uses statistical data to forecast future prices with specific probability. It plots a standard deviation bell curve, designating ranges within which the price are forecast to stay for each following expiry Friday. Very powerful tool. And so there you go. You see the 105s, which I did the fib extensions, is exactly 38.2. And the 107 is 61.8, where the 109, and this is going to be October, this is November, this is December, this is January, based on a standard deviation. It is oversold, and it looks like it's going to pull up. So everything looks really, really good on that. So I will go through this again at a later date and go through this specifically. We don't have the time right now. So Apple looks like a Rui, looks like a good trade. I chose the ACK 105s. There they are. Or a bull call spread on ACK 100 105s. Target price of 108.88 based on Friday's close. I don't know how much it changed today. Only 64 cents. Not a lot. So if you did the 100, you bought the 100 and sold the 105s. So you're at the money. You can buy that for $2.06, which, guys, on a $5, oops, that's wrong. Yeah, there it is, 166. $5 spread. Always look at a return of at least 2 to 1, minimum. Ideally, you'd like to have more, but on spread verticals, you won't. Spend 166, you can make 334. So that's a good deal. That's Apple. Last one, Baidu. And then we'll call it quits for the day, and you guys can do your own review. 9 out of 9, strong trade. .15% move. Stock is up today. That's a strong stock. 220.47 times, what was that move? 615 times 1.0615 gives me a target of 234 on Baidu. That's only $14. Guys, I traded this heavily on weekly expiries with a breakout. Remember, I have that system I showed you guys. This system for a breakout with different time frames. This is more of a macro. And it worked. This stock could easily move $14 in a week. I mean, it's a mover. It's like a price line. So $14 move to get to there is really nothing. And what I had put is October 230 or a bull call 220, 225 with a target of 232. See, because this has gone up now, the target has gone up to 234 because the stock is up $1.45. So 230s, there's 4,100 open contracts, 848 volume, 28 delta. You can pick it up for 267, which is 1.1% premium, very cheap, unlimited profit for $267 for one contract. Good deal. Or you could do a bull call, which limits your profit, but then, of course, it's your risk. And what did I put? I put the 220, 225s. So you could buy at the money, 220s, sell the 225s. And again, if it's under $2.50, I'll do it. If it's above that, boy, I've got to have a compelling reason, because this still gives me a potential of making 100% return on my money. Okay, so that's Baidu. And from a technical standpoint, as you see, this is what I went through on all the stocks. And it's bouncing right off. I don't know if you guys can see this. I'll blow it up a little bit. Bouncing right off the 50. That green line is a 50 MA. It's acting as a real nice support level. The first retracement level, and that's why I put in 23.6, which is not a common one that people use. Most people use the 38.2 and the 50, and specifically the 61.8 if you're longer term and you're buying some time, as a resistance points going up, and also used as targets. And if you look at the first October expiring, it says potential has to go to 238. So all probability says that, hey, you got to, and you've got to, if I got rid of all of these high drawings, So you guys can see this probability cone, hide the plot. Oops, why did I get rid of half the study? That's weird. Oh, that's why. Sorry. I wanted to show you the hull has turned green. You can barely see it there. And when that DPO pulls up and we get a PPS trigger and price breaks above that, when this starts to narrow, the Bollinger Bands start to narrow and price is moving up, again, strong stock against a contrarian trading, a market that's going against the trend, means very strong. So very strong probability to go up. Mid of linear regression is 228 with a 90 spread. Best choices is 68.6 spread deviation between these. So Baidu is going to be oversold, and mid is 233. That's why I put a target of 230. One of the reasons 220, 232. So that would be a real good trade, in my opinion, where you have a high probability of winning. Last one, of course, is Google. It's expensive, guys. I might as well, since I'm here and I'm on a roll. 90% winner, 10.87. Let's go to the premium. AUK expiration. I don't know if I did AUK. No, I did November. I bought some time on Google because Google, I've learned, will suck you dry with volatility crush. November 630s for 278. 22 delta. It's only went down 9 cents, so it hasn't changed for my 22 delta. Did I do numbers? Yeah, November 630 or AUK. Yeah, okay. In other words, I wanted to buy some time to play the run-up and not have so much volatility crush. Unless you went a lot closer to the money. And again, Google's a big, big mover. So that's what you're looking at for Google. So really, the 626 to 638, between the 38 and 50 would be a real good probability. And you got 621 in AUK, 645 in November. So picking the 630s for November is pretty good and realistic, and that's why I went out to November. If you're going to do the AUKs, though, I did the 587, 592, 50s. 587, 592, 50's got to be under $2.50. Ooh, it's right there, $2.55. Still, for a Google trade, I'd probably do it. You always want to have some intrinsic value when you're doing a vertical. It's one thing I've learned, at least from the weeklies. I haven't really done the monthlies, but I would assume it applies to the same thing. I don't have a lot. I mean, this is 87.50 and this is 87.81, so what, I have 31 cents intrinsic. But ideally, you want to have something in the money on what you're buying on a directional trade. So that's what I've analyzed for Google so far. As time goes on, the next 2 weeks, we'll talk about perhaps taking a trade on Google if everything looks ripe on the weeklies as time gets closer. In other words, this will become the weekly of the day of earnings release. They always release the Thursday before the Friday of expiration. And I'm pretty sure that is when Google is announcing. They're not showing it. Well, let's go to October. That's weird. I don't know why they don't show it. They're not showing it. Google's playing sneaky. Let's see if NASDAQ has it. October 16th. And you think about, when is October 16th? When is expiry Friday? There it is, the 17th. They always do this. They always do it the Thursday before expiring Friday. They always do it after market, which means you could come in and position yourself at about 3:30, quarter of 4 with a cheap weekly option, pretty close to the money, dirt cheap. And, you know, your delta is nearly nothing. But if it busts through your strike price, you're off to the races, folks. So we'll take a look at that down the pike. Okay, any questions other than that? I will finish up, and I will email everything out to everybody. It's 5:24. It's going to take a little bit longer to render this time, but it should be up and running here in the next 3 hours or so. All right, with that said, folks, thank you very much, and I wish you all great trading. Till next time.